some of the biggest and most well-known companies in America, like the ones in the S&P 500, are having a bit of a tough time right now. That means that people who want to invest their money in the stock market might be a little worried about putting their money into those large cap Goliath companies. But did you know that you can still invest in the little guys too? There are some other smaller companies that are doing really well and might be a good investment. Call them the Rocky Balboa, the Ant-Man of the Avengers. They are nimble so they can adapt. They can drink those disgusting shakes and run in the snow. They can be those unsung heroes or those underdogs you never see coming. Whether these small cap companies are willing to put in the work or they exist in those nooks and crannies of the world that allow them to exist in their own little quantum realm, these companies are worth another look for your investment portfolio. They might not be as well known as the big companies, but sometimes the little guys can surprise you as they topple giants. To keep updated, be sure to subscribe and hit the notification bell so you can be amongst the first to know when more investment inspiration videos are available. First on our list, we have DELEK US Holdings Inc., ticker symbol DK. And it's a good thing they're holding us up at the bottom. Why? They make rocket fuel. DELEK US Holdings Inc. is an energy company. They are all about refining, transporting, and delivering oil and other things like gasoline and, of course, rocket fuel. DELEK has 4 refineries all over the southern United States. In addition to their refineries, they also have 3 biodiesel plants that can make up to 40 million gallons of biodiesel each year. That's a lot of fuel. Now you might be wondering, how well is DELEK doing, seeing they're an energy company? Yes, they have participated in the energy rally. In 2022, things were really good for them because they are in the energy sector and people needed energy. With the rising cost of oil and fuel, DELEK made a lot of money in 2022. But what about 2023? Well, as you may know, in 2023, a lot of our oil is going to have to come from America, and a lot of other countries want to focus their oil purchasing from America as well. And with DELEK doing all of their business and having all of their refineries in America, this puts DELEK in a great position to profit even more in the coming years. Currently, DELEK pays a dividend yield of 3.09%. Next on our list, we have PACTIV Evergreen, ticker symbol PTVE. Even though PACTIV Evergreen is a big deal with $6 billion in sales each year, the company is not very popular with investors. PACTIV Evergreen are experts in making special types of packaging products like cups, lids, and food containers. Even though their market value is only $2 billion, they actually bring in a whopping $6 billion in revenue each year. That is some crazy valuations. But why is that? Well, investors are not really interested in investing in this company because the packaging business is very competitive, so it can be tough to make big profits. However, this company is trading very cheaply. It's currently selling for just 6 times earnings, which is a bargain. Plus, things should get much better for them over the next year as problems with the supply chain and prices will start to improve. While PACTIV does have a lot of debt, they're doing a great job paying it off with their strong earnings, which means in the future, their stock could become much more valuable. So, even though some people might not be too excited about PACTIV Evergreen right now, they may be a great company with a lot of potential. Currently, PACTIV Evergreen pays a 3.69% dividend yield. Next on our list, and a steakhouse I thoroughly enjoyed when fund managers would wine and dine me, RUTH'S Hospitality Group, ticker symbol RUTH. Have you ever been to a fancy steakhouse? Well, I have. and I must say, it is a great experience. Ruth's Chris is a really fancy one, and it's owned by a company called Ruth's Hospitality Group, Inc., and they have restaurants all across the United States and some in other countries like Japan, Hong Kong, and Singapore. Because Ruth's Chris has a very high and upscale clientele with very deep pockets, they don't have a lot of restaurants, but they do have a lot of revenue generated by their fewer than average restaurants, for a restaurant chain, that is. Now, in 2022, the price of beef went up a lot. I'm sure many of you noticed at the grocery store, beef got really expensive, which made it also harder for Ruth's Chris to make as much money on their steaks as well. But the cost of beef is going back to normal. And with the restaurant industry recovering from the pandemic woes, Ruth's Chris is expected to make even more money. Additionally, they've started using digital channels like online ordering to make it easier for people to enjoy their fancy steaks in the comfort of their own home. Currently, Ruth's Chris offers a 3.34% dividend yield. If you like these kinds of videos, be sure to like and share it with a friend who could use some inspiration. Subscribe if you haven't already, and let's get back to the list with the final two. Next on our list, we have another stock that likes folks with those deep pockets. The Bank of NT Butterfield & Son, ticker symbol NTB. Did you know that there's a bank that only serves people who live on some really fancy islands like the Bermuda and the Cayman Islands? That's what this bank, the Bank of NT Butterfield & Son, does. Even though to me, this bank sounds like either a bakery or a bank that gives out loans to bakeries, they're actually a high-class bank that helps all these high-class folks who live on these high-class islands manage their high-class money. And since there aren't a lot of other banks on these islands, NT Butterfield gets to be the only show in town. Another thing to note about this bank is that they have really careful leaders who don't take too many risks. Remember, their clientele have money, and once you have money, your goal is to make sure you don't lose it. So many times, these banks choose much safer investments, which, for the bank, usually makes a good amount of money from fees, which means they don't have to worry as much about changes in interest rates. Now, this bank might not grow as quickly as some other banks because they only serve a few small islands, but what it does have is a nice 8 times forward earnings ratio and a nice 4.9% dividend yield. Next on our list, we have First of Long Island Corp., ticker symbol FLIC. First of Long Island has been around for almost 100 years. That is a really long time. And this bank only lends money for houses and buildings in New York City. This bank is super smart because they only focus on real estate, which means they don't give out loans for things like cars or credit cards. By only lending for real estate, they don't have to spend as much money on things like advertising, and it's also less risky for them too. And since New York City is a really big place with a lot of buildings and apartments, there are plenty of loans for First of Long Island to give out. Over the past 10 years, the bank has grown by about 8% every year, which means they could be a great choice for people who want to grow their money and get some extra cash along the way. Currently, First of Long Island Corp. Pays a 4.9% dividend yield. We hope you enjoyed this list of the top small cap dividend paying stocks to buy. For more investment inspiration, be sure to check out our playlist on dividend paying stocks, or check out our famous investor playlist to learn more about how these investors got their inspiration.